hoping for goodness of you all. Now we are going to discuss the topic verification of liabilities under the subject quality. First we discuss about the verification of share capital. There are two types of share capital. First, if the first year of existence of the company. Next category is if it is not the first year of the company. Let me discuss about the if it is the first year of existence of the company, means new issue. First of all, auditor have to go with the knowledge of memorandum of association and articles of association, because both the documents authorized for the issue of shares. Then the auditor have to read the minutes books and resolutions passed in the board meeting for the reference. By the going with MOA and articles of association and minutes and resolutions passed by the meeting, the auditor can get the authorization information about the issue of share capital by the company. Then, if the shares are issued other than cash consideration to the vendors against the receiving of some assets, then agreement with these vendors, discount premium on issue of share capital without any cash consideration should be checked properly. It should be very carefully seen by the auditor that if security premium is there, means issue are with the premium, then to treat the security premium account, the amount of security premium should be separate kept in security premium account, and this amount of security premium will used only for the permitted purpose. For the issue of share capital, there were various calls made by the company to receive the calls money. So all call money should be verified by the auditor, whether it is first call, second call, and so on. And also the inclusion of security premium and discount on issue of share should be checked by the auditor. To raise the capital from issue of shares, the company had to call money in various calls. Sometimes it happens that some of the shareholders didn't pay a call money. Then calls in arrear there, and these unpaid calls should be verified by the auditor very carefully, that how much calls were there unpaid and how amount is there. Opposite to it, some shareholders paid their all money in advance with the first call or second call. Then the extra amount received beyond the call money will be transferred to calls in advance account, and at the time of next call it should be adjusted. Next is forfeiture of shares. Forfeiture of shares means after the calling the money on calls by the company, if a shareholder is incapable to pay his call or didn't pay his call, then after giving proper time and notice, company can cancel the share capital due on unpaid call. This is called forfeiture of share. So in case of any forfeiture of shares, any number that has been forfeited by the company, the entries regarding forfeiture should be properly accounted for in the client business. That should be checked by the auditor. Sometimes it has been happened that reissue of forfeited share is also there. Then auditor have to verify that how much number of shares has been forfeited in earlier time, and out of them how much number of shares are issued. This reissue is on premium or with discount. It should also be verified by the auditor. The auditor have to ensure himself about the proper disclosure of share capital in the balance sheet, whether it is nominal capital, issued capital, subscribed capital, called up capital, and paid up capital. And the treatment of calls in area should also be reflected in the balance sheet liabilities side. Auditors should also verify the proper disclosure of share capital in the balance sheet. And the last one is relevant provision of Companies Act. Provisions regarding bonus share, right share, share issued other than cash consideration, share capital issued to promoters, calls in arrears, calls in advance. The provisions regarding all these topics should be very carefully audited or verified by the auditor with the reference of Companies Act. Next is, if the company is not the first year of the company, means the company is carrying more than 1 year. This is not the first year of the company, means company is existed already. Let me discuss. First, share capital amount in total should be checked by the auditor, that what amount has been shown in the previous year balance sheet, and the same should be recognized in the books of account of current year as opening balance. Next, any type of alteration, any type of addition and reduction of share capital should be verified by the minutes of meeting and resolution passed in the concerned meeting. For the resolution, for the decision taken by the management for alteration, addition, shares, bonus shares and reduction of share capital should be referred by the auditor, and it may also be take a reference from the minute book of the company. Provision of Companies Act regarding the change in the capital, alteration in the capital, reduction in the capital have to be very much clear that they are followed properly for addition, alteration or reduction purpose. Let me discuss the verification of share capital if it is not the first year of the company. First of all, share capital amount from the previous audited balance sheet should be checked with the opening balance of the current year. Then alteration, addition, reduction have to be checked related to the provision of Companies Act 2013 for any type of change. If company issues some right shares or bonus shares, then entries regarding issue of these type of shares should be recorded properly, because these shares will affect the share capital. For the purpose of verification of amount received on call of right share or bonus shares should be checked by the passbook and bank. If there is any unpaid call or calls in advance, then it will also be checked by the auditor in the verification of share capital, forfeiture of shares, reissue of forfeiture of shares. If any additional issue conducted in the audit period, then related to the additional issue, forfeiture, reissue, forfeited amount should be checked by the auditor. Next point is proper disclosure in balance sheet. The proper disclosure of share capital and the liability side of the balance sheet with reference to provisions of Companies Act should be verified by the auditor. Because as an internal liability, amount of share capital should be very much clear in the balance sheet. Because equity shareholder are the actual owner of the company and they have to very keen view regarding the operations of the company, regarding the successfulness or failure of the company. So it should be very carefully verified by the auditor. Next assets is reserve and surplus. Reserve and surplus include the profit earned by the company for the current year and in addition to the current year from previous year. So to verify the reserve and surplus head under the balance sheet liability side, the auditor have to check transfer amount from the profit and loss account towards the appropriation account. Because all the distribution of profit and loss are treated in the profit and loss appropriation account, whether it is retained earning, whether it is payment of dividend. For the payment of dividend and retained earning portion, it has been always decided by the board of directors in a meeting. So for the verification of retained earning or dividend paid to the shareholder will be cross-checked by the resolution passed by the board or minute book of the meeting of the board of directors. Regarding the reserve and surplus, proper disclosure should be there that current year profit, previous year profit or any profit arising due to capital nature of transaction should be disclosed properly in the balance sheet so that investors can get a transparent information regarding the operations of the business. Next is utilization of reserve. The reserve should be utilized for the stated purpose. For any illegal purpose or the purpose that is not related to the business, the use or utilization of reserve and surplus is not allowed. If auditor find any situation that utilization of reserve was done beyond the limit of the company or MOA or AOA, then it should be noted by the auditor, communicated to the management, and also reference of this event has to be taken into consideration by the auditor in his audit report. The next liability is trade creditors. Trade creditors are those persons from which those parties, those businesses from which the business purchase goods on credit and make payment later on. First of all, auditors should get a list or schedule of all the creditors with their final amount so that he can observe that how much creditor is there in the business concern and which type of amount involved to be paid in the future. the auditor can also get a direct verification of balances of creditors from the creditors also, with the help of email, with the help of call, with the help of written letter. He can get the direct balance verification from the creditors. Actually, when creditors give the verification regarding their balances due on the client firm, then it will be more reliable, because letter of confirmation from the side of creditors provide much and more reliability as the outside evidence. Creditors' individual accounts in the business ledger book should be verified by the auditor. By the verification of individual account of creditors, an auditor can get the information regarding the opening balance, purchase during the year, payment during the year, and the closing balance of the particular creditor. At the time of payment to the creditor, involvement of any type of discount, rebate, or any relaxation from the side of creditor, if any, then it should be proper account for. Sometimes creditors allowed the cash discount for quick payment, then it should also be checked by the auditor with the help of invoices supplied by the creditor and payment made by the client firm. Categorization of creditors as per or on the basis of period should be done by the auditor. This impart the auditor that which type of creditors are working with the client firm for a long time, and they will allow a long credit period to the client with us. Then goods purchased on return basis. This will also be very carefully verified by the auditor, because they affect the total balance due towards the creditors. Same in case of goods purchased on hire purchase system. It will also be very carefully verified by the auditor to find out the exact amount of creditors. In case of books of accounts, if a credit balance, if a balance of creditors means creditors has been paid over amount than he required on the basis of bill, then it should be shown separately in the books of accounts as debtors. For the payment towards the creditors, the auditor have to go with the checking of cash book and passbook. The checking of passbook and cash book will provide the knowledge regarding the time to time payment by the company to their creditors. Some creditors which are carried from a long time, for those auditors should put a query before the management that why they are showing in the balance sheet from a long time and there is no payment also in the books of time from the long time. And after discussion, he may give a proper suggestion to close the account of these creditors or in any other way to close them. Next liability is proposed dividend. Dividend means the reward on investment from the side of shareholders paid by the company. This is the return on share capital invested by the shareholders. It is very much directly related to the shareholders. So regarding the dividend, Minute book or resolution of the various meetings should be checked by the auditor. Minute book and resolution provide the authenticity regarding the dividend and its distribution or amount. Profit and loss appropriation account should be very much carefully checked by the auditor, because any type of appropriation from the profit will treated in the profit and loss appropriation account, whether it is dividend, whether it is retained earning. The provisions of Companies Act 2013 regarding the proposed dividend should be checked very clearly. Even proper disclosure should be ensured by the auditor in the books of accounts regarding the proposed dividend in the client business accounts. Proper disclosure is very much required, because proper disclosure of proposed dividend make a transparency between the company's financial statement and expectations of the investors, whether they are existing or they are futuristic. The dividend to whom will be paid, a list of those persons, those shareholders should be checked by with the amount of total dividend by the auditor, because this is the area where manipulation may be found, where manipulation may be taken place. So list of dividend receiver should be thoroughly checked by the auditor. For the payment of dividend, cash book and passbook will also be verified, because any type of payment of dividend will pass with the passbook or cash book. If any type of dividend will given to the shareholders in form of assets, then it should be verified. For its verification, again cash book and passbook may be taken that dividend in any other form has been distributed that is not affected in any sense for the cash and bank. So it should be advisable to the auditor to check entry of these type of dividend that there may be some manipulation in the cash or passbook. Dividend is very sensitive term for the shareholders, because they invest their money in purchasing of the shares of a particular company to receive maximum dividend and to grow their amount. So auditor should very carefully verify the all aspect of the dividend. Next, liability is outstanding expenses. Outstanding expenses means expenses due but not paid till the completion of the financial year. So the amount due but not paid treated as outstanding expenses, and treatment of outstanding expenses will done at the profit and loss account with the main figure of expenses and in the balance sheet at liability side. For the outstanding expenses, a representation from the side of management by an authorized officer should be required by the auditor as a certificate regarding the outstanding expenses, that this particular amount has been shown as the outstanding expenses and this is related to the something at that one expenses. For the outstanding expenses, auditor have to check cash book and passbook also, because the payment of expenses or any type of outstanding expenses pass through the cash book and passbook. Checking of main expenses. In this point, auditor have to check the main expenses and its duration and its total amount related to the full year. This information make a cross check with the outstanding amount of the particular expenses and the total amount that may be paid by the client business. Time period of expenses. Time period of expense means if expenses is periodic, then it should be checked with the month or time duration of the financial year. And this will help or assist the auditor to identify the exact outstanding amount. Regarding the outstanding expenses, auditor have to see that it will be paid in the subsequent period. Only disclosure of the outstanding expenses in the balance sheet is not sufficient from the point of view of the verification of outstanding expenses, but it should also be ensured by the auditor that the outstanding amount of the previous year may be paid in the current, and it should be verified by the auditor. If at the time of payment of all outstanding expenses related to the previous year in current year, which is the audit period also for the auditor, then he have also to see any type of discount or rebate is allowed to the client firm, then it should be properly accounted for. For the proper verification of outstanding expenses, auditor is required to check the accounting treatment very carefully. That if rent is outstanding for an amount, then it should be shown in the profit and loss account by adding with the main amount. And the second treatment of outstanding expenses is in the balance sheet. Liabilities side means the portion of outstanding expenses should be shown separately, and it will included in the under the head of current liabilities of the balance sheet. The next liability to discuss for the verification is debentures. Let me discuss it. Debentures are the long-term fund raised from the outsiders for the running of business. First of all, the auditor had to be go with the memorandum of association and articles of association for the better understanding of the authorization to issue the debentures. Then the auditor should go for the terms of issue of the debenture and types of debenture, that which type of debenture has been issued to the debenture holders. They are redeemable or irredeemable. They are redeemable in how much time. In present time, redeemable debentures more than 20 years are not allowed to issue. For the issue of debenture, passbook and bank book for the call money on debentures has been verified by the auditor. By this, he can get the knowledge of price per debenture and various called to receive the money on the allotment, application, and final and other calls also. In case of any unpaid call, in case of calls in advance, the auditor have to verify that proper accounting treatment has been given to the unpaid calls or calls in advance. Debentures issued other than cash consideration to the vendors, then it will also be checked by the auditor that if any assets is taken against the issue of debenture, then assets and debenture both should be accounted for in a proper manner in the books of accounts. Debenture holder received interest against the investment of their money in purchasing of debentures. So, rate of debenture, payment time of debenture, whether it is quarterly, half-yearly or annually, it should be checked by the auditor to verify the liability of debenture in a better manner. If company issues redeemable debenture, then provision for redemption of debenture should be checked by the auditor, and type of redemption will also be checked by the auditor with the accounting treatment, whether there has been a provision made or not. The redemption in terms of lump sum amount or by installment. Redemption will be on premium or at par. All these things have to be checked by the auditor in the process of verification of debentures. If company issues some debentures as collateral security, then it will be checked by the auditor then how much amount is affected in the issue of debenture because of collateral security. So, for the verification of debenture, an auditor is required to go with these consideration for the better work of verification of debenture, concerning to reading of memorandum and association of association, articles of association, terms and types of debentures, unpaid calls and calls in advance, passbook and bank book for call money, debenture issued other than cash consideration, payment of interest on debenture, types of debenture, whether it is redeemable or non-redeemable, and debenture issued as collateral security. So these was the topic that we discussed today as verification of assets and liabilities. First we analyze the meaning of verification, then we take reference from the Institute of Chartered Accountants of India, then we take the importance of objective of verification. After that, we discuss about the techniques of verification like inspection, observation and confirmation, and some of the advantages we have been discussed in this topic. After that, we started the verification of assets part, and first we discussed the types of assets, because the type of assets in the process of verification of assets is matter. So current assets, fixed assets, intangible assets and fictitious assets we have discussed as the base for the verification of assets. Then we start various assets one by one under the process of verification. In case of assets, first we discuss the verification of cash in hand, then cash at bank, then petty cash, then cash in transit. After that, we have discussed the verification of debtors, then plant and machinery. After that, verification of land and building, or we can say verification of property in two terms: freehold property and leasehold property. After freehold property and leasehold property, we have discussed verification of motor vehicle. Various organizations maintain motor vehicle in their assets, so its verification is also very important. After that, verification of investment we have done, verification of goodwill we have done, preliminary expenses. Preliminary expenses means the expenses before the commencement, before the registration of the business, registration of the company. One time when the company is registered, Till this limit, all the expenses are treated as preliminary expenses. These includes expenses for the formation of the company, stamp duty, etc. etc. Then we discuss the verification of patent and trademark under the head intangible assets. Then copyright. After that, verification of liabilities we have started, and under the verification of liabilities we have discussed the verification of share capital if it is the first year of existence of the company, and again we discuss the verification of share capital if it is not the first year of the company. Then we discuss about the verification of reserve and surplus. This is the profit part of business. Then we discuss the creditors. Creditors is very much important for any business because they supply the goods on credit to the company. Then proposed dividend or dividend are related to the shareholders and company's dividend policy. After that, we discuss about the verification of outstanding expenses. Outstanding expenses means the expenses due but did not pay till the 31st March or balance sheet date. Then we discussed a big source from the outsiders for the business, that is debenture. Now we discuss a next topic, concept of audit evidence. Concept of audit evidence. Institute of Chartered Accountants of India deals with audit evidence, and with the help of standards on auditing says that the auditor is required to gather proper or sufficient appropriate evidence to enable him to draw reasonable conclusions therefrom on which to base his opinion on the financial information. It is expected from an auditor that in the last stage of auditing process, that is audit report, when he provide his opinion, then the opinion is based on the concrete base, or concrete base is only be maintained by the getting proper evidences. Different evidences should be collected under different auditing situations. The auditor should understand the nature, type of evidence available in different situations, and also have the ability to evaluate the sufficiency and appropriateness of available evidences. Sufficiency refers to the quantum or adequacy of the evidence, and appropriate refers to the relevance and reliability of the evidence, means how much evidence are there and how much true evidence are there, whether the evidence is reliable or not. So the auditor should obtain sufficient quantum of relevant and reliable evidence. The evaluation process of the audit evidence is herein referred to as the verification. So what is the concept of audit evidence? That auditor should gather sufficient number of evidences, and evidences should be reliable in the nature, because on these evidences base an auditor will provide his opinion in his audit report. Then what about audit evidence? Yes, audit evidence refers to the information or data that use or collect by auditors as a part of their audit work for the purpose to make their opinion, to conclude their opinion that whether the financial statement prepared by the client firm in all respect providing the true and fair view or not. Auditor have to conclude their audit work with their opinion on whether or not financial statements are prepared in all material respect and in accordance with the applicable financial framework. So, audit evidence enable to the auditor to analyze that financial framework has been followed by the client business or not. Before auditor could make the conclusion on the financial statements as a whole or any part, they need to make sure that the evidences they gathered is sufficient enough with appropriate quality to make the conclusion. Only obtaining the evidences are not sufficient from the point of view to make the audit opinion. It have to be ensured by the auditor that sufficient evidences are there and evidences are up to mark in the quality. Means they provide the accurate and reliable information regarding the information contained in the financial statement of the client books of account. Audit risk that auditors might face also depends on the audit sufficient and appropriate of the evidence. Means if auditor obtain the evidences and on the basis of evidences he finalize his report, he give his opinion, and after that it was find that the evidences are not sufficient enough, the evidences was not reliable, then risk of audit risk is there. Audit risk means after the audit there may be chance to left over of the frauds and error in the books of accounts. Audit evidence is obtaining by the auditor throughout all of the audit stages, including the planning stage, execution stage, as well as conclusion stage. And to gather these evidence, the auditor use many different technologies and procedures suitable for them. So, audit evidence concept impart us that to make the final audit report by an auditor regarding the true and fair view or financial framework of the client business books of accounts, the auditor have to gather sufficient audit evidence, and the evidence should be reliable and accurate. Now, characteristics of audit evidences. Realities. Audit evidence always be of those nature that reflect the reality. Means they will not be fake in nature, they will not be imaginary in nature. Imaginary evidences or fake evidences may defeat the purpose of auditor's audit work. Next is, evidence should be capable of creating a definite impact on the opinion of the auditor. Means after the getting or obtaining the audit evidence, if auditor did not find any change, any effect on the concreteness, on the negativeness of the information contained in the client business books of accounts, then the audit evidence is not proper. So it should be impactable, it should be material, it should be important, that provide a base to modify or to change the opinion or to confirm the information contained in the client business books of account. The evidences may be direct or indirect. The evidences may be internal or external. Internal means generated from the client business itself, and external audit evidence means generated from the outside of the client business. For example, cash book is maintained by the client business, it is internal evidence for the cash verification. But passbook maintained by the bank or bank statement provided by the bank is an external audited evidence that is provided by the bank itself, and it is from the outside of business. Evidence may be direct or indirect for the confirmation of debtors and creditors. An auditor can get the list of balances or creditors and debtors from the inside of the business or accountant of the business. But as indirect, or direct differentiation, auditor can directly get the confirmation from the creditors or debtors also. So, evidences provided by side or by the business may be the nature of indirect, and audit evidence collected by the auditor himself directly from the information related person is called as direct evidences. So, if the audit evidence is reflective, if the audit evidence is effective, if the audit evidence is direct, and if the audit evidence is from the outside of business or external, then they provide more concrete base to rely upon the information contained in the books of accounts of the client. Characteristics of audit evidence generally common for all the type of business concern, but some characteristics may be additional as per the circumstances, and as per the nature, as per the size of business transactions in business. Next, type of audit evidence. Next point is, in the types of audit evidence, we can discuss the following points. Audit evidence may be a financial statement that contain the information regarding the business transactions. Financial statements includes balance sheet, profit and loss account, cash flow statement, registers, bill book, and other statement or registers like store register, investment register, debtors register, creditors register, patent register, copyright register, etc. Accounting information. Accounting information refers to the transactions recorded in the books of accounts at the primary stage or at the principal stage. Primary stage of recording of accounting information means recording of business transactions in the journal or subdivision of journal. Means purchase book, sales book, purchase return, sales return, cash book, and journal profit. For various categories of transaction should be categorized according to the division of journal, and they should be entered in the primary book. At the principal stage, accounting information can be gathered from the ledger accounts, because ledger is a principal book of accounting. It includes accounts of all the heads, whether they are related to profit and loss account or balance sheet or assets or liabilities or income or expenses. So it is also a type of audit evidence. Bank accounts. Bank accounts maintained by the business in ledger account or bank passbook maintained by the bank itself. Both may be a type of audit evidence. Bank account prepared by the business itself in its ledger books, it is as called as internal audit evidence, but the passbook or bank statement provided by the bank itself, it is called as the external audit evidence. Management account. Management account is also a type of audit evidence. It provides regarding the transactions entered in the management account. Fixed assets register. A business includes various types of fixed assets to run the business, to generate the income. So, it is required by a business that he have to maintain a register by entering full detail of all assets in it. Full detail means purchase date, depreciation rate, depreciation amount, written down value, addition during the particular year, sale or deletion of assets or any part of its assets, even profit earned on them and loss suffered on them. In case of revaluation of assets, the difference should be made or marked in the fixed assets register with proper treatment. Payrolls listing. Payrolls listing is a type of audit evidence. It imparts the auditor regarding the number of employees, basic salary of the employees, gross salaries of the employees, even PPF, ESI detail will also can gather from the payroll listing. It will very helpful to analyze the human resource management or to verify the salary account. Bank statements. Bank statement means the summary of the particular duration provided by the bank to the client firm. This is a type of external audit evidence and more and much reliable than the bank account maintained by the business concerned in his ledger book account. So, bank statement is a reliable audit evidence, reliable external audit evidence. The auditor may get the bank statement with the request to the client or directly to the bank by giving the reference of audit and some information from the company in which he is doing the audit work. Bank confirmation. For any type of query regarding the deposit in bank, withdrawn from bank, and payment made to direct by the bank, and payment received direct in the bank, an auditor can confirm directly with the bank with the reference information included from the side of client business. This is called as the direct confirmation from bank. This is a type of audit evidence. Invoices. These are the bills, supportings generated by the outsider of the business, that is supplier. When a client business is going to purchase raw material or purchase assets or purchase some other assets for the business, then supplier or vendor issue a invoice. It will also include it as the external audit evidence and a type of evidence. Receipt. For the payment of any type of amount, a business can get receipt from the side of receipt. Auditor can also verify it with the help of passbook and bank book also. If the payment is done directly with the cash, then with the cash book, and if the payment is directly done by the bank or check, then it may be verified with the help of bank statement. And other documents used by business to support financial transactions or events in the financial statement is also a type of audit evidence, and they may be obtained or they may be gathered by the auditor for the better performance of his audit work. Audit evidence can be obtained by the various methods. Now we discuss about the methods obtaining audit evidences, methods on the basis of which auditor can get the audit evidence. First is inquiry and confirmation. Second is observation and inspection. Third is surprise check. Then re-performance. Then analytical review procedure. Then card. All these are we have discussed at the time of techniques of auditing. Actually, techniques of auditing are the technique to get the audit evidence to verify the information contained in the books of accounts of the client. For the better performance of audit, it is very necessary to get the sufficient and reliable audit evidences by the auditor. And on the basis of reliable and sufficient evidences, an auditor can go to form the audit report or give his opinion. So here the concept of audit evidence. So here the concept of audit evidence imparts us that it is very much required from the side of auditor that he have to get the sufficient and reliable audit evidences to make the audit report, because his audit report is opinion that whether the client business books of accounts shows that true and fair view is based on the information given in the books of accounts with the confirmation of audit evidence that is gathered by the auditor. He may take any type of technique to get or gather these type of information like audit evidence. Techniques are inquiry, confirmation, observation and inspection, surprise check, pre-performance, analytical review procedure, CART. Okay, for today we conclude this. Thanks for listening carefully. Good day. Thank you very much.